Hey guys, I got two topics on deck for today's podcast. One is going to be risk management, the power of and how not to sabotage yourself. The other is going to be a story about the 90% trader. And trust me, if you haven't heard this one already, you are going to get a kick out of it. Now, if you haven't done so already, make sure you head over to our website, www.tier1trading.com. I recommend checking out the free workshops and all that fun stuff, but also signing up for our 14-day risk-free trial membership. That gives you access to the platform, our community, our software, the live rooms, and gives you 14 days with the best trading community on the planet. www.tier1trading.com. Check it out.
All right. When you hit target one on patterns, are you rolling stops to the entry of target one so we have a risk-free trade? So I only take target one, so I'm one in, one out. So once my target ones are hit, my whole position is done. But yes, if taking a secondary target, once you hit your first target, my advice would be to collect your profit, adjust your stop loss, so adjust the position size of your stop loss since you no longer have the same position size on, and then move that stop loss to break even. That way, you may not make money on the remaining position, but you put yourself in a position where you can't lose any, aside from maybe a little bit of spread and slippage and stuff like that. So yeah, I would highly advise moving it to break even. I don't think, one of the rules in trading is once you have money, you never want to give money back, right? Once you make money, you never want to give money back to the market. Now, it's important to understand when we say that, because that saying could be misinterpreted, right? Understand that when I say once we make money, you never want to give money back to the market, does making money mean that a trade has gone 10 pips in your direction? That it's up 10, 20 pips from where you entered? Is that making money? Yeah, no, right? And I think that's what gets a lot of traders in trouble, where they assume that once price has gone in their direction, 10 pips, 20 pips, whatever it may be, 100 pips, that they have made money, right? You don't make money until the trade is closed out, right? Open profit is just that. It's open profit. It is not money yet. So you can't say that, hey, price went 20 pips in my favor. I've made money, so now I'm going to lock it in, right? That's not necessarily a great approach. But once you've made money, meaning once you've closed out of a position and collected profit and it's in your account, on that individual trade, you never, in my opinion, you never want to be in a position where you give it back. So you don't want to make 20 pips on your first target and then you don't roll your stops and then price comes all the way back down and stops you out for minus 20 pips, because now you just turned the winning trade into either a losing trade or a break-even trade. So yeah, always reduce risk, in my opinion. Obviously, per your rules, just don't randomly do it, but always reduce risk after you've made profit, in my opinion. The One Pip Exit Trader. I used to work with a guy that was like that. This was very early on in my teaching career. And there was this guy that was in the live room. He was frequent in the live room. Yeah. And he had this, he wanted to be, he was all ego, 100% ego. And his thing is, he wanted to be a 90% trader. Because this was back when, when we started, this was back Trade & Power, but we've always been preaching a message that people didn't want to hear, right? I like to think we didn't originate anything, because professional traders have preached this message for a long time. But as far as educators, we had to be one of the first educators, at least one of the first mainstream educators, to kind of preach the message of the reality of trading, right? Everyone on the internet was talking about get rich quick, 90% trading, this trading strategy, this EAs were big back then. So everyone was trading mechanical strategies that you would buy for $20 and it would make you profit forever. There was a lot, it was, especially in Forex, because Forex was new. So there was the sleaziest of salesmen out there. And we were the only ones kind of going against the grain, saying hey, trading is hard, trading takes a lot of work, you're not going to be 100% return on investment per the year. If you can make 5% a month, you're doing great. All the stuff that is not sexy, right? So I'm in my room every day and I'm preaching because I've always been about a 55% trader. So I'm preaching to these guys like, hey, I'm a 55% trader. I win a little bit more than I lose. I make my money off of, a good risk profile and smart risk management and all that fun stuff and slow compounding and the stuff that is boring, but what trading is really about. And, obviously I would fight a few battles in there where it's people coming in and they're like, well, no, man, you want to be successful. You got to be 80%, 90%. I'd be like, yeah, it's not really sustainable over a long period of time. But, no one was saying it. So people were just like, who's this weirdo young guy that's in here talking this nonsense? So I worked with this guy and he wanted to be a 90% trader. And he was intent on proving it to me because I'm like, no offense. I said, I don't know any 90% traders. I at the time, right? I don't like saying anything is impossible. At the time, I probably was saying stuff was impossible because I wasn't as open-minded. But I was like, yeah, it's impossible to be a 90% trader over the long period of time and make money. So he's like, I'm going to prove you wrong, Akil. I'm going to show you, right? So I worked with him and when I say work with him, he was in a live room. I didn't actually teach him or anything like that. He was in the live room. He wasn't doing any courses. And I remember that was his goal. And every month he'd be like, I got closer, man. I'm like 70% now. I'm at 80%, Akil. I'm almost there. You'll see, right? He no longer cared about trading. It was just like my picture was on the back of his wall. And every day he woke up and there was I'll prove him wrong, right? That was his motivation, right? Probably went to sleep thinking about me, woke up thinking about me, fresh on his mind. But anyway, so he was out of the live room for a little bit. And I remember getting like an email or a message somewhere, one of those deals, a few months later. And he was like, Akil, I did it. I had my first 90% month. And I was like, yeah, man, congrats, man. That's awesome. I knew you can do it. All like the BS. Like, I didn't really care. I'm like, I knew you can do it, man. I'm glad you worked for it, right? That type of stuff. Because, like, I was happy for him. Like, I didn't really care because I had a follow-up question and I kind of knew the answer. But I was like, hey, good for you. Like, I'm not mad at you. I'm happy. Like, you completed a goal. This is great. Way to prove me wrong. Like, if you prove me wrong, that's a good thing. And then I asked the guy, what was your return on investment? How many pips did you make? And you know what the answer was? Yep. He was in the red. In the red. No lie. 100% facts. He was in the red. And I was like, dude, I mean, that's, congrats on your 90%, but like, let's get our priorities straight. Like, what really matters? But again, he didn't care. He was all about being 90%. Oh, I'll figure it out. Once I get the win percentage down, now, the rest is just math. I'm like, right? But he got his 90%. But he was in the red because what he was doing was, to get his 90%, he wasn't letting his trades play out. So instead of taking, I don't know what his average, reward would be, but he was cashing out profits really early on. I'm talking like 1 or 2 pips into the trade, just because guess what? If you get 1 or 2 pips into the trade and you cash out, what is that? It's a win, right? But ask yourself this question. Do you cash out every time your trade goes against you 1 or 2 pips? No. So he's taking a small fraction of his wins to get the win, but he's taking full losses. So I don't know how many trades he had, but let's say he had 10 trades, right? That one losing trade took out 9 of his winners. Plus spread and commissions, yep. Took out 9 of his winners. Self-sabotage. So you got to be careful. You hear stuff that's like, 90%, a high win percentage, right? I've always said win percentage doesn't matter. In fact, one of the first podcasts I put out was called Who Gives an F About Your Win Percentage? It's back when I had the weird intro and all that fun stuff. It was extra hype because I was excited. Now I've calmed down a bit in my old age. But yeah, self-sabotage, man. That's a real story. That is a real story. But it's again, the question is, what are you driven by in trading, right? And we talked a little bit earlier about the team meeting we had and talking about the younger generation, and because we're seeing younger and younger generations get into trading. Oh, I got another old message this morning. I got a guy who watched an old video, and he's like, Akil, I started watching your videos when I was 13, and now you're 22. I want to thank you for being my mentor and stuff like that. And I was like, you were 13 and now, and I remember the dude. I'm like, 13 and now you're 22. I've been doing this for that long. How? Like, you were a baby. Now it made me feel bad. I was happy for him because he was. I remember talking to him at 13. He's like, look, I can't trade because like I'm 13 years old. Like I'm far away from it, but he had the right mindset. He's like, hey, I'm going to invest my time and learn now. So by the time I get to college or whatever, I can have this skill. And I was like, hey, go for it, man. I wish I would have known about this stuff at 13. And now he's 22. It's like, oh my gosh, it's crazy. But yeah, it's the younger generation. And this guy wasn't a younger guy, but what are your goals, right? Are your goals just to show off for social media? Right? Is that the main goal? Is it all for the clout? Is it just to show off for social media? Because a 90% win percentage will do that. You can get a big old gold chain that says 90%er. But when we look at your ROI, your return on investment, the thing that really matters, you're also going to be the 90% of that. But not the 90% of winners, right? The 90% of traders that lose. Because we know 10% of traders are successful. You're going to be in that 90% that lose. So that big old 90% gold chain is going to have two reasons, right? It's going to be your win percentage, but it's also going to be the category of trader that you fall into. What's more important? Easy question for me. Easy question. But not everyone sees it that way. Hope you enjoyed the episode. If you want more of yours truly, make sure you check out my YouTube channel, youtube.com/Akil Stokes. You just enter Akil Stokes in the search deal there and you'll find it. Lots of videos throughout the week, including these Trading Coach podcasts, daily live streams, and of course, the weekend trading edge, which I've been doing for about 9 years now. So youtube.com/Akil Stokes. See you there. Make sure you like, subscribe, and hit that notification bell. That way you don't miss my next video.